Hi there. Tell me, why do you think the stock price of Medical Property Trust will go back to $20 per share and the dividend will more than double to 10% and then to 20%? Why do you think that? You might say that if you look at the past, same thing happened in 2009 when it was the recession. The stock price was around $12, declined over 64% as it happened in 2023, and then it has rebounded and continued to grow a lot. And this, you might say, can happen again in 2025 and beyond. See a rebound in the stock price over 20% and the dividend to reach 20%. Now, if you believe that, that means you also understand why the stock price has declined so much, over 80%. And if you look at the stock price in recent months, you see an increase over 50%. So that's great news. But still, you have to understand why this massive decline happened, and then to understand why the rebound is possible, why they have their chances. So, first of all, if you look at their dividend over the years for Medical Property Trust, you can see that from 2014, for instance, it was 20 cents per share. And to 2023, that dividend has increased to 29 cents. But then, because of some problems they face, the dividend has been cut in half once in 2024, and then another half at the end of 2024 and starting 2025. So now, because of this cut in their dividend, the stock price has declined a lot. Maybe you know that Medical Property Trust is a REIT, and they are obliged to pay 90% of the earnings in dividends by law in order not to pay taxes. And that's why the dividend can get quite high, especially when they get more funds from operations. Now, to understand why this stock price has declined, yes, you look at the dividend, you see this cut in their dividend, but this is not the answer. You also have to ask yourself why the dividend has been cut. Do you know that? Well, if you look at Medical Property Trust, for instance, their total revenue for the last 3 years, and you see that here, their tenants, they represent more than 10% of their total revenue. And back in 2022, they had 2 tenants, Steward and Prospect. In 2023 and 2024, you no longer see those 2 tenants, Steward and Prospect. Maybe if you read the news, you know that those 2 companies, Steward and Prospect, face more problems with their debt. Some of them went bankrupt. They declared bankruptcy. And because of that, Medical Property Trust lost almost 40% in revenue. If you look here in the right side, Steward represented back in 2022 27.7% of the revenue. So one tenant represented close to 40% of the revenue. Another tenant, 11% of their total revenue in 2022. And if you look at the stock price in 2022, you can see that back then it started the huge decline, over 80%. And if you look also the revenue back in 2022, it was about 1.5 billion. Net income was quite higher, 900 million. But then if you look at the revenue, next year, 2023, you see a decline of about 40%. And also a decline in their earnings. So if you do the math, 27 plus 11, close to 40%. And that's why the stock price has declined so much. Now another question is, and you have to ask, is why those 2 companies went bankrupt, faced problems. Do you know why? Well, let me show you here. Back in 2022, interest rates were about 0.08%. The next year, 2023, interest rates went up to 4-5%. And this is the main reason why Medical Property Trust and its tenants faced a lot of problems. The good part is interest rates have started to decline, starting from 2024, from 5%, 5.3% to 4.3%. And they are likely to go down more in the future. When that will happen, nobody knows the exact answer, but for sure they will go lower. Why do I believe that? Well, the government, the Fed, has to maintain that growth in the economy. That's why I believe that interest rates will get lower. Nobody wants high interest rates because people take loans, they buy stuff, different goods, services, and they need low interest rates. So that's why. Now, to understand if Medical Property Trust can rebound, the stock price will go back to $20, you also have to understand the current situation. If you look at the latest report, you see an increase in the revenue from 800 million to 900 million, and that's why. Also, the stock price started to go up, see an increase over 62%. But if you look at the most important indicator, normalized funds from operations, you see a decline to 482 million compared to last year. Now, this happened because also they had huge impairments. The value of their assets got lower, but that doesn't affect their overall profitability in the long term. Only for past shareholders. That is bad. They already suffered a lot. This huge decline over 80%. Now, you see that Medical Property Trust right now is paying a dividend around 5%, 5.3%, and the market cap is about 3.6 billion. From this level, you have to ask yourself if this dividend can be maintained, because if they cut again the dividend, the stock price will go down again. So, first thing, if the dividend can be maintained. And second thing, if the stock price can bounce back. So let's start with the first thing. You see their normal funds from operations close to 500 million. And you also have to look how much they pay in dividends, especially 2024. 321 million. So their funds from operations cover the dividend and they are left with some money to add to their properties. Here you can see capital additions, constructions, they might build other hospitals and other expenses. So they not only have to cover the dividend, but also they need some money to fund their operations, to invest in their infrastructure and expand their network of hospitals. So for the moment, if they make around 500 million in funds from operations, they can cover this dividend. Now, as they might increase the revenue more in the future, because you already see an increase from 800 million to 900 million, close to 1 billion, their funds from operations may get higher in the long term. And this dividend can be increased. Not that much to see a double, let's say 10% in the next 2 years, because they have other problems. But this dividend may be maintained unless their tenants face other problems. So in this list, in this table, you see their main tenants. Circle, 14.2% of their total assets. Priory, 8.6%. Healthcare System of America, 8.3%. LifePoint, 5.7%. Swiss Medical Network, 5.1%. And Stewart, who went away, 0%. And of course, they also have other operators. So, if their tenants no longer face other problems with their debt, with their facilities, with their funds, then Medical Property Trust can increase their revenue and invest more in their assets. And their normalized funds from operations can increase. So everything depends on their tenants. And you have to ask yourself, will their tenants survive to pay their rent? Well, to assess that, you also have to look and ask yourself, where are these tenants from? And that's it for this video, and if you have other questions, please let me know in the comments.